Hey, what's up guys, John here. Homes are now unaffordable in 99% of America for the average earner. And they say the average earner earns over $70,000 per year. Is it me or is this pretty crazy? Because just a few years ago, $70,000 a year was a pretty good income. The average person that went to school for 4 years, 8 years, applied themselves, they were making between $65,000 and $100,000. Now the average is in between $70-something thousand a year. It's pretty crazy. And I think this information is something we all need to pay attention to. If you're a renter, if you're a property owner, if you're a real estate investor, if you're somebody that wants to do real estate transactions, look at the data, look what's really going on to form a smart, forward-thinking decision on fact, on what's actually happening, not what they're telling you, what is actually happening. I'm going to break it down for you clearly in this video, verifiable facts. Please hit the like button. YouTube will share this content to educate other people about what's really going on. And if you want to fix your credit, we'd love to help you. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or you just don't know what's going on in your report, you have no idea why your score is not increasing. Maybe you have a 500, 600, 400 credit score, maybe low 700s. You don't know what's going on. Go to GreatCreditFast.com, book a free strategy session. We will review your report with you, look at everything line for line, tell you what the best game plan and strategy would be to fix your credit, what it would look like, timeline, answer any questions that you may have. At least you'll be able to get the answers to make a decision on if it makes sense for you or doesn't make sense for you, to be able to plan for 2024 and 2025, which I think will be one of the greatest real estate investing opportunities of our lifetime. So go to GreatCreditFast.com below. Take a look at this. Homes are now unaffordable in 99% of the U.S. for the average American. This puts housing affordability at the lowest point since the GFC, the Great Financial Crisis. I think that what we're walking into is much, much worse than the GFC. I mean, in every variable, it's going to be much worse than that. Housing prices are growing more unaffordable, even with the astronomical rise in mortgage rates, putting home ownership out of the reach for millions of Americans. That's according to a new report published by real estate data firm Adam, which examined 572 U.S. counties and determined that the median home price in 99% of those areas are out of reach for the average income earner who makes $71,000 a year. That is the average, they are saying now. The latest trend continues, a 2-year pattern of home ownership getting more and more difficult for the average U.S. wage earner. Affordability is worsening across the country thanks to a third quarter spike in both home prices and mortgage rates, combined with the two have helped to push the typical portion of wage earners nationwide required to make home ownership expenses up to 35%. The latest number is considered unaffordable by common lending standards, which call for a 21% debt to income ratio. So for context, they are saying this is the average $71,214, right? They are saying the debt to income ratio, 26%. That means if you have $20,000 as a down payment, you could afford a home for $154,000. The average home in America is $410,600. So if you make $71,000, you can afford less than half of the average home in America. You would have to make roughly $150,000 to be able to afford a home in America. And even that would be pushing you to a point to where you can't comfortably afford it. It's on the upper end of that price point, making $150,000 a year. People think that we're going to have a soft landing. This is going to be very challenging for a lot of people, to say the least. It marks the highest level since 2007 and stands well above the 21% figure from earlier 2021, right before home mortgage rates began shooting up from historic lows. There are several reasons to blame for worsening affordability crisis. Federal Reserve aggressive interest rate hike campaign sent mortgage rates soaring above 7% for the first time in nearly 2 decades. Rates have been slow to retreat, notching a new 23-year high on mortgage rates as of this month, or last month. The average rate for a 30-year fixed rate is 7.31%. It's not 7.31%. That's what they say. If you look at where mortgage rates are, mortgage applications being rejected based on income. Mortgage applications, they've grind to a halt. Mortgage rates at 7.5% applications fall to the lowest level in 1995. If you have perfect credit, 800 credit score, maybe you could find a loan officer that could give you a 7.6, 7.7%, 7.5%, maybe. But if you are the average American, which has a 698 credit score, you're in the 8s. That's where the average person's at. So when they put out 7.3 or 7.5%, that is the A++ borrower. That's not the average American. Average American's over 8%. So that's where the average is at. So that's why, they say these numbers and people are like, okay, 7%, it's becoming normalized. It's not 7%. Freddie Mac reported well above 5.89% rate recording 1 year ago. And during the pandemic, our lows are 3%. Even though mortgage rates are nearly double what they were 3 years ago, home prices have hardly budged. That is largely due to the lack of available homes for sale. Sellers who locked in low mortgage rates before the pandemic have been reluctant to sell, leaving few options for eager would-be homebuyers. The big question is, sure, there are so many people that own homes with 3% mortgages attached, 4% mortgages, 2.875% mortgages. But what happens when this labor market starts to soften up more? What happens when insurance and taxes continue to rise? What happens when upkeep becomes too expensive? Well, people end up selling their homes, giving the keys back to the bank, renting out their homes. They start looking at ways in which they can save money. And if you look at the average apartment right now, the average apartment, $1,700, $1,700. No upkeep, no insurance, no taxes, no responsibility. You're going to start seeing a lot of people, regardless of their mortgage rate, be pushed into considering that option. It's a sad situation because the American dream, for the most part, is anchored into home ownership. The number of available homes on the market at the end of July was down by more than 9% from the same time last year and down a stunning 46% from the typical amount before the pandemic began early 2020, according to a recent report on Realtor.com. The housing shortage has only served to boost consumer demand, which is keeping prices uncontrollably high. The National Association of Realtors reported that the national median existing home price is $407,000 at the end of August, up 3.9% from the same time period ago. The dynamics influencing the U.S. housing market appear to continuously work against everyday Americans, potentially to point where they are going to start to have a significant impact on home prices. So what's going to happen? And if you read these comments, it's really fascinating. Everyone is saying the same exact thing, that the American dream is slowly fading away. I believe what we're going to start to see here is we're going to start to see a situation where we're in a market right now where there's very, very few buyers that can actually go out there and afford to buy, that want to buy, that have the cash, that have the credit, that have the job history to be able to qualify for that mortgage. And there's very few sellers that want to sell. But that's going to change. It's going to change, I believe, in 2024. In a pretty big way. I think that the pool of buyers is going to continue to shrink as rates continue to rise. But as this job market changes and everything gets a little bit harder in this economy, you're going to see more sellers chasing a smaller pool of buyers. And that is when everything's going to start to change. I'm betting that we see in 2024 a massive investing opportunity in residential real estate and a huge investing opportunity in commercial real estate. I've seen so many different interviews of wealthy people having a hard time getting funding and financing on their commercial deals, their large office buildings, saying, you know what, we have 50% debt on this property, we still can't refinance. It's getting pretty bad out there when it comes to lending on commercial property. I can only imagine how banks are going to respond when banks start getting the keys back to a lot of these offices. You have $1.5 trillion in commercial loans that have to get refinanced in the next 12 months. 1 in 10 commercial properties in America has to go back to the bank and apply for a refinance and hopefully get a loan. 1 in 10. It's a $20 trillion market. This is a huge situation. Over $2 trillion in debt has to get refinanced. So when you look at this is 2007. That was a walk in the park. The average home price at the height of the GFC was over 200 grand, just over 200 grand, about $220,000, $230,000. The average home now is double that. Yet wages haven't really moved much. In fact, wages have softened 4 years in a row. So you have wages softening, inflation going through the roof, insurance and taxes, everything going up, food going up, and we're stepping into a situation in this economy where wages are only going to be going down. You have JP Morgan CEO Jamie Dimon saying, we're going to be going to a 3.5-day work week. You have Ray Dalio, multi-billionaire worth $19 billion, saying that there's going to be a 3-day work week. They came out and said this within a 24-hour interval, all because of AI technology and robotics. So you have this situation where when we look at what the housing market is fully comprised of right now, this right here, the brown, all the way into the black, into the beige, into the brown again, this is the entire market of people that own properties aged 45 to retirement age, past, over 75. So if you go just from the black over here, this is over half of the entire housing market. This entire section is all people at retirement age, right? How are these people going to be able to afford all of these changes that are happening when many of them are sitting on fixed incomes, right? They're sitting on a fixed retirement plan. They're going to be forced to sell. We're walking into a massive wealth transfer in this real estate market, and I believe one of the biggest wealth creation opportunities that we will ever see. If you're a renter right now, that is going to be, in my opinion, probably a situation you're not going to want to be in 5 years. You probably won't want to be in a market where large corporations own basically the entire U.S. housing market. That's what we're going to start to walk into. Because when that happens, they're going to be able to control quality of life. They're going to be able to control everything because they can just increase rents as they see fit. Mom and pop investors generally don't operate on the same caliber. Believe it or not, mom and pop investors, many of them have a heart and a connection with their tenants. You have a large corporate landlord that has 200,000 houses. They couldn't care about the tenant and the tenant experience. So you're going to want to likely own property, position yourself for that. This is a great time to learn about real estate. It's a great time to study your market, a great time to even speak to a mortgage lender. I'm not saying to apply and buy a home right now, but I'm saying it's a great time to learn about the process. They'll be able to tell you how much money you'll likely need as a down payment, where you'll need to be able to qualify to get financing, for when you want to buy. They'll give you a free roadmap and just reverse engineer that with having the cash, having the credit score you need, having everything in line, and then when opportunity comes, you can move in and pounce on these deals. If you need help fixing credit, we'd love to help you at GreatCreditFast.com. Drop your comments below, and I'll catch you guys in the next video.